Good morning, everybody. Welcome to another day of Mark Burt, brought to you by Mike Bjork. Today is Thursday, and it's January 28th. Wow, end of the month here, approaching us very quickly. Hey, we got a couple economic news releases to go over today, so we'll jump right into it. We'll start off with the weekly jobless claims. So, weekly jobless claims looking good here, as last week we had 294,000 people apply for unemployment. Forecast is supposed to dip to 281, and we surpassed that to 278. So, good numbers there. We had a nice, after a spike upwards last week, it came back down to 278, so that's respectable. However, we got the durable goods orders not looking so good. We had a 0.5% decline in the month of November, and it was supposed to go a little bit further down at 1.5% was the forecast, and it way surpassed that, much more expectations at negative 5.1% for durable goods. Also a little disappointing is the pending home sales. We had November we had a negative 1.1%. A lot of that was kind of attributed to the TRID going into effect in October, which was kind of delaying a lot of the the sales transactions going on there. So they thought December would go up to 1%, and only went up 0.1%. So it improved, but not to quite where the forecast was expected. So that's a little disappointing right there. Weekly jobless claims good, but unfortunately durable goods and pending homes came a little disappointing here. Stock market's actually up, and a lot of it has to do with they like of course, the weekly jobless claims, but a lot of it has to do with, of course, the oil. We've been so volatile of late where oil is, and it jumped up to $34, so it's gone up quite a bit from the previous low. Now, a lot of it is attributed to Russia and OPEC. There's reports out there that Russia and OPEC are going to be meeting and talking about pulling back on their production on oil, which would, obviously increase the profits for them or lower their costs. As right now we have an oversupply of oil out there, and of course that will probably be further once Iran starts sending out their oil production as well. So. But of course, both are denying that there is anything imminent between the two. So right now it's just reports, so it's more hearsay versus actual reports. So we could see oil dip back down a little bit further, as again, unless there's anything coming to concrete about Russia and OPEC. Sorry about that. So anyways, let's jump ahead here. We got the bond market is up a little bit too. We're up currently about 6 basis points from where we left off yesterday. At the Fed had gave their announcement yesterday. Basically, the stock market went down and it helped us out in the bond market. And that was primarily because they didn't take the rate hike off the table. So they basically left it in the wording of the message that they will leave it on there, but most likely it won't happen anytime too soon because they are watching. They did acknowledge that the fourth quarter did dip a little bit in terms of where the economy is going. Obviously, the concerns were the global and oil. Concerns about those two levels where the global economy is at, as well as the oil. So, as a result, March, the projection of March having a rate hike has dipped from 34% down to 25% chance of them going ahead as a rate hike in March. So we'll have to wait and see where things move, see if we can get some improvement, continue some improvements, or if that was just a little bit of a blip. But again, the Fed basically said that they're leaving it on the table, which kind of disappointed the investors, which led to, of course, the stock going down yesterday. But again, they didn't say they're gonna rush into anything as of yet. All right, folks. Hey, you guys have a great day. We'll see you guys tomorrow. Thanks so much for watching, and enjoy your day. Bye.